Welcome to Tax Insights, presented by Hawkins Ash CPAs.
Good morning, listeners, and welcome back to Tax Insight here on WOMT with Jeff from Hawkins Ash. Jeff, good morning, sir.
Good morning, Terry.
How are you?
I'm doing well.
Excellent. Jeff, today we're talking about ways to save for retirement.
We are because, we've been talking over the last couple of weeks about tax planning for the end of the year, and retirement plans are a great way to lower your tax bill. And also, with businesses having a hard time finding employees, this type of employee benefit may just tip the scale to get that new employee.
Absolutely. And I know that there are a lot of ways, a lot of options available, and I do have a list of here, so let's start at the top. IRAs.
Yeah, so IRAs, I would call that the entry-level way to save for retirement. So for 2021, IRAs let a person contribute up to $6,000 if they're under the age of 50 and $7,000 if they're over 50. Now, there's certain income requirements that have to be met, but I would say that, if you don't have access to an employer's retirement plan or you're able to contribute above that plan, this is a good option. Now, you can also do a regular IRA, which is deductible, or if you don't necessarily need the deduction this year, you can do a Roth IRA, which is not deductible.
So what about a simple IRA?
Yeah, simple IRAs are the lighter version of a 401k. With a simple IRA, you can contribute up to $13,500 as an employee contribution if you're under 50, and $16,500 if you're over 50. So as you can see, we're jumping from that next step, going from $6,000 in a regular IRA. In a simple IRA, you can do up to $13,500. Plus your employer gives you a 3% match in most cases. So if you make $50,000 a year, your employer is going to kick in an extra $1,500 as their contribution to your retirement. And the great thing about this plan from the employer's point of view, it costs very little to administer it.
So what about a 401k?
Yep, so now we jump up to the next step. So this is kind of the Cadillac plan for retirement. So with the simple plan, you can put away $13,500. With the 401k plan, you can contribute up to $19,500 if you're under 50 and $26,000 if you're over 50. So this is meant for people that really want to kind of supercharge their retirement. Plus, your employer can give you a match of almost any amount that they want. And this kind of thing can separate one employer from another. Now, 401k plans also have the benefit of having that regular 401k function, which is a tax-deductible contribution, or the Roth 401k option. So even though these are advantaged because they have higher contribution limits, it does tend to come at a little bit higher administrative cost. So you got to kind of weigh both of those together.
Right. What about an SEP plan?
Yeah, so SEP plans, these are plans that are fully funded by your employer. We see most of these for self-employed business owners that don't have any employees. What this allows a self-employed business owner to do is contribute up to 20 to 25% of their net income from their businesses into their retirement plan. And the advantage is that you can contribute, up to $58,000 into these type of plans if your income is high enough.
So there are other plans that will allow for even more savings, right?
Right. So there's profit sharing plans, there's age-weighted plans, there's defined benefit plans, all kinds of different plans that are available and will allow you to save even more tax dollars than what we talked about before.
So what about if an employer right now, they don't offer a retirement plan? What is the first step to getting one of these set up for employees? Because you're absolutely right. This is something that could really separate you from another company in a market right now where everybody's looking for employees.
Yeah, so the first thing I would do is I would talk to your investment advisor and your CPA. And also, there might be credits available to offset some of the costs for setting up these plans. So, yeah, I agree with you totally that if a company doesn't have a retirement plan at this point, it's really time that they start looking into it.
Absolutely. Jeff, great information each and every week here on Tax Insight. For those listeners that want to connect with you and the team, how do they do that?
I would go to our website, which is hawkinsashcpas.com.
Jeff, we'll talk to you next week, and until then, thank you.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs. Part of your business, part of your life.